folks, I'm LA Little and this is your weekly TA wrap. We take a look at these markets and we do it from a slightly different perspective, asking ourselves each time what happened last week and what does it tell us about the coming one. I do a show once a week every Sunday night live at 9 o'clock Eastern Time here from the base of the Rocky Mountains. Yes, it's a neoclassical perspective, an attempt to measure supply and demand on the charts. Use that along with trend to make better decisions. It's what I believe to be a more profitable way to try to trade these markets, especially when the markets do something beside go up, which seems to be an unnatural state anymore. Everything seems to simply go up. But there will come a time, and we'll have to see when that time is. If you remember on Thursday, we were looking at these markets. We were considering the fact that more than likely that employment number on Friday was going to be weaker than was expected. And that more than likely the result of that would be that we would get these markets to try to sell off. And that sell-off, if it were to occur, would probably set up some ABCD structures to the downside. Well, we got a weaker number. And if you remember, one of the main things we were looking at was the bonds. And those bonds, when we looked at them, we were thinking that what we would see would be an ABCD structure take place. And that structure was laid out just like this, and that's exactly what we got, right back up to the swing point highs, testing. It's got resistance right above it, big bar here, wide price spread. That's what it's going to attack, that's what it's going to try to get over. Came into it with pretty good volume, and that volume, suggests it's going to go after it. So a swing point high, that's no contest. The big bar is over here. Over there you got about 14.1. You're coming into it with 13.1. So you can see the volume's not quite there, but that tell was bonds wanted to go higher, which meant the employment number probably was going to be weaker of the jobs creation than what it was expected, and it was a whole lot weaker. 200K plus is what they were thinking. We got like 73. Market sold off for a half a day, and then they turned around and went up again. I tell you, a bull market is hard to kill, and if you've never been through one like this, sometimes you just think, oh well, there's nothing ever going to stop this thing, and that's not really the case. There will be something at some point, but in the meantime, this thing is a beast, and it doesn't want to give it up. Never wants to give it up. Let's go look at the S&P. And we'll look at a little bit over the overseas markets as well. 3 long tails now. 1, 2, 3. The big bar is still trying to get into January 2nd. Top of that bar is 1845. We're sitting at 1842 and change. It's going to attack it, right? I mean, I don't see how it's going to keep from attacking it. And I say that because if you look at the Russell itself has already gotten over that price point, and that price point has been a key one. It's held the Russell back for a week. Russell gets over it now, right? Russell's going to try to attack this high now. And so that Russell, which has been one of the better indicators for a long time now, is suggesting potentially that this consolidation may be just about over, and this thing's going to try to break out and do a range trade breakout and trade up to the next level. Now, that doesn't mean it's going to happen, but it looks like it's certainly going to attack it and try to make it happen. NDX, not as strong, doing the same sort of thing though. IXIC, NASDAQ, stronger at the highs. This thing is within 2 or 3 points. It's going to attack the highs tomorrow. We'll see if it gets over them. It tried on Thursday, fell back, tried again on Friday as it ground back higher. You can see long tails again. That usually suggests that things are going to try to move up again. And if you look on a weekly, I mean, all it is up, up, up. You now got a swing point at a higher price point, 39.11 on the low. So if what you can imagine, and we're nowhere near this yet. What you can imagine is if this does fail to break out, and it finally does come back to retest and regenerate, that price point where that swing point low is 39.79 here, the 39.11 is actually up there, right? So it'd have to come all the way back here to try to change trend, and you can see that's going to be a tough job indeed. So what you have to think of right now is that, hey, the first trip back probably is going to be a buy, still would be set up that way. That would be the first trip back for a retest regen. And what you'd like to see is you'd like to see it fail and come back, right? Sets up a better buy. But, this market's had a mind of its own. This week is earnings. You've got all the big financials, and I haven't pulled them all up and looked at them all, but I suspect they're all sitting there at the highs. JPM, we'll just look at them on the dailies. So JPM's hanging at the highs. Wells Fargo, same thing, hanging at the highs, extending. AXIP is going to be out this week, also hanging near the highs. You can just go down the list. I think they're all going to be pretty much the same way. Morgan Stanley hanging at the highs. Goldman Sachs, right? And if you look at the XLF, that's what it's doing, right? Stretching. Doesn't want to come in. This has been a big reason the SPX is hanging up here and trying to stretch higher. This will be the story this week. There is some economic news, but it's minor. You got Fed speakers all week again. That number on Friday was taken as, the Fed's not going to taper nearly as fast as we thought, right? That's good for the market. And that was, the knee jerk was down. And then it's the good news is good news, the bad news is good news. It's that kind of market. That will change, that perception, right? It's all perception. That perception will change at some point. But right now, it hasn't. And if it hasn't, you simply got to go with it until it wants to change. Let's pop over and look at the world markets right quick. And there, they also were up. I mean, here's the CACs, for example. But you can see inside day, really couldn't get much going, still hanging here. This thing still looks to me like it's going to try to set up an ABCD structure to the downside before it's over. If I go over to the strongest one, which is the German DAX, same thing, inside day, couldn't get anywhere, even though it was pushing higher, right? Pushing higher off that swing, off that low from Thursday. The FTSE actually did better, pushed up. Now, the FTSE always does better when the metals do better because so many are listed on that exchange. And so when the metals were strong, which the metals were strong, that helped the FTSE to push up. And if we look over at GDX, you can see strength there. GDXJ, same scenario. The miners, the small cap ones, all of them trying to push up. Gold itself, and actually I should probably pop over here so we can see the weeklies as well. So let me go over there to the AUX markets. And here we go. If we pull up gold itself on both the intermediate and short-term time frames, gold is trying to put in a bottom. Gold got over the swing point high, less volume, got over it though, closed over it. Swing point high 120.05. This guy closed at 120.26. It's over it. What does that mean? Well, it's going to do its very best to attack the next level. ABCD structure. Oops, let me get the right pointer here. So you got an ABCD structure from here to there, and it actually came back to this price point. That structure takes it up into this resistance zone. That's the next swing point high. That's this high. That's the one it wants to attack. That's where the volume is next in the wide price spread bar on the breakdown. Remember, gold had not been able to successfully get over a retest regenerate zone now for ages. It did it. It got over it and got over it with ease, it looks like, right? Gets over it, spikes back down, tries to get under it, never can, pops up. Now this thing's going to try to do the ABC structure up. Gold's going to try to come up here and test this resistance zone. Gold helps the London Exchange, given the miners are listed there. A lot of the big cap miners are listed there. Let's take a look at silver while we're here. And I want to pop in and look at the NG. I know there's a member asking about it last Thursday and still interested in it. Yeah, this looks almost the same. Bonds we already looked at. Now bonds have already finished up. Let's go back to the bonds. They've already finished up the ABCD structure. They're breaking into the high. They have decent volume. Looks to me like they are going to push a little bit more, and that's probably where they're going to get their pullback. But bonds held that low. Remember when we were talking about it Thursday, what we were saying is, hey, they should have broke down. They didn't break down, right? They were down below the lows here. They were down below the lows here. But that should have led to a fast 2 to 3 bars on the highest time frame, which was the weekly, and it didn't. And when a market doesn't do what it should do, that means it's probably going to turn around, do the opposite, and probably do it with some force. That's exactly what you saw on Friday. That was one of the reasons I thought we would get a pullback along with what we saw over in Europe. Europe just held, though, actually was up, but held in that little range inside days. Now our markets down, grind back higher, hang in there trying to get over the highs now. They're going to test it. Still looks to me like they're going to fail, but they're going to definitely try to test it, it looks like. Let's go look at NG, since I know that we've got UNG and the UNL. We've got a member that evidently is trading this right now, so let's pop in here. Well, this is the price point. It didn't get to the low, though, so you got to let it test. That low was 1945. Came into it 1947. You want to test it, so just be patient. Let it test it. If it can't break it down, that would be the place to take your position on the long side. Let's look at the dollar. Dollar got hammered on Friday off those employment numbers. And the one thing I have to say, here's the FXE popping up. And the FXE looks like it's going to fell into this bar. 135.25. It traded as high as 135.28. So it actually went into it, didn't have the volume, flipped around and failed. May try to attack it one more time, but that looks like it's not going to go. The thing I want to actually segue into as part of talking about the dollar, and I'll pull the dollar up next, is that the Fed has signaled that they are going to do this thing they call taper, or what the market has labeled taper. The Fed typically doesn't start down one direction and then just quickly reverse course after a month. So I think what you're going to find, the Fed meets next week. And I think what you're going to find is that they're going to outline more tapering. And so this little burst off this employment number, you know, the good news that is for some markets, bad news for others like the dollar, I think you're going to see it reverse its course within another week. Because I think then you're going to get the Fed, and you may get it as soon as tomorrow or this week with all the Fed speakers starting to soften up this idea that the dollar is going to fall that much. Dollar came down, tested, had absolutely no volume. This to me also, like the FXE, looks like it's going to flip around and go back the other way. All right, let's go. Those are the main things. Let's take some questions, and then I will segue back into some other ideas if I have time. So let's see what we got. Good evening, Federico. He wants to know about DD and STE. So let's pop over there and see what these guys look like. Now, DD is DuPont. DuPont, a big chemicals company. They've basic materials, chemicals, you know, huge player in that sector. They had a retest regenerate this past week and had pushed higher off of it. That retest regen, if you're not familiar with the concepts, or even if you are, I'll just review it here. You had 3 swing point highs taken out. 1, 2, and I'm drawing them this way because these are the retest regen zones. And as you can see, there was 2 primary areas that those retest regenerate zones highlighted. One was this area, and the other was the rest of it, right? Well, it came in, tested into that top area 2 times, or actually 1 time, and then back under it the next day, and then back over it, spiked up, right? And what did it do? It did what everybody else is doing. It went into the January 2nd bar. That's where the resistance is. Got up into there, pulled back some, has a decent tail on it. I would assume that you're interested in going up. I would expect it's going to attack it again. Right now, it looks to me like it's going to fail and probably come back down here and do some more retesting into this regen zone. Because there are 2 lower ones here, it can come back and try again. So if you're in it, you know, you get your spike up, take some of your profits. If it comes back down, then you can leg back into it again. That's the way I'd be viewing that one. STE. And let's see what we got here. So STE, this is in the healthcare sector. They do medical appliances. This is Steris Corporation. This looks like an ABCD structure up. It had a breakout, good volume, and it did an immediate retest regen on the weekly. You can see it right here, right? That's the retest regen zone, and you can see immediate retest, right, and regenerate higher. So that's doing exactly what you'd like on the weekly. If you look at it on the daily, you've actually got a nice ABCD structure. You see exactly where they fall. Yeah, so from here to there, back down, and it's doing that run. So I like this. This is a nice stock. Let's see if that actually did the retest regen already. That high was 48.50. The breakout was here, and you didn't get it. So you still may get a retest, an attempt to regenerate. And what I'm talking about is this swing point high. That's 48.50. The zone is from the top to the bottom. The bottom of that guy is, what is that? 47.93. So anywhere from about 48 to 48.5. I don't know that it will come back in there right now. You may just get the extension up. You have already done that retest regenerate over here, so it can just extend higher. But this is a good looking stock. Set up nicely, and you've got about half this leg still to go in terms of the ABCD structure to the top side. Now, one thing I always try to point out to you this time of the year is earnings are here. Next 3-4 weeks, it's going to get earnings from the majority of the companies. You have to go check that. If you're interested in a company like STE, you got to know when their earnings are coming out, and you got to, you know, make certain that you trade around them and not get too heavily positioned in front of them, because, folks, you can get 5, you know, depending on the stock, you can get, you know, 200% of the daily move easily on an earnings call, right? You can get a 5-10% drop. So be sure you're aware of that, because I'm not looking at earnings here as I'm talking about these. LinkedIn, long from 215. I think we looked at LinkedIn once before. I'm not sure if it was for you, Stan, but let's pop in here and see what it looks like. Somebody had emailed me and asked me about it last week, actually. And I forgot to say about it last time, but I did do, actually do a, pop in here, I did a 1-minute trade on this guy, right here. So if you're not registered, register, pop in here and take a look at it. The 1-minute trade is about from 4 days ago. My opinion hasn't changed all that much, so that would probably be useful to look at. Okay, so here's LinkedIn, and yeah, I did look at this because I remember now. The question was, it was actually on the next day. He had his stop underneath here. I told my comment that day, which was the 8th, was if it starts to work higher, bring your stop up, right? Because it really shouldn't come back down there. What you want to do is get his stop was down here below which was like 198.60. So I'm assuming his stop is about 198 or something. You're getting a pop up. Let's see, because we got some more data points here. Let's see what it's telling us now. And your position is where? 215 is where you got long, and it's right there, 218. Okay. Okay, so this one didn't finish the ABCD structure down, but it got pretty close. It was very close, actually. And now you're coming back up. Okay, so the bar here is 218.44. You're 218.75. So you got over it with less volume, slightly over it. And you got a wide price spread bar here. Excuse me. Oh, and you got a big wide price spread bar on the way down here. So that one is 222. Okay, so this is where you're going to get your trouble. I mean, if this thing's going to die and come back, it's going to be off of this little zone you see right here. You got a gap, right, that was filled on this high, but you have a swing point high there, and you have this big wide price spread, heavy volume. Those are tough to get over and stay over. And as you can see, when you and this is the way they typically work, is when you do this early enough. In other words, this prints, and especially on a bullish stock, because this stock has been bullish, right? Strong's bullish stock. Those that have been trading this, they don't give up trading it very easy, right? They keep trying to trade it. And it's only when they get their head handed to them a couple times that they quit. And they really haven't had it handed to them yet. But if you look here on the weekly, these volume trails are not positive, they're negative, right? You had nice big spikes up, right? Spike up, another spike here, and then eventually you get over it, less volume, and now you spike down on big volume twice. That tells me that's going to be difficult to get over. Now, the way it usually works is when you see that, let me clean this up and do it again. When you see that the first couple times, they'll trade it down and they'll come right back up and they'll tack it again, but they'll fail each time, and that's what they've done, right? And this one got almost to the high, which is very normal. Then it comes all the way back down, tests the low, and has volume. A little spike up, back down, test the low again, you had less volume. Okay, so you don't have enough to break it down completely. Now you're spiking back up. I think you're going to see it die right here, and you're going to see it come right back and try to break it down again. And this may trade this way for another few weeks. But I suspect what you're going to see in the end, this bar is going to break, right? Didn't have enough volume to break it the first time to it. But it's going to break, and you're going to come all the way back down into this area. So don't overstay it. You know, make your money, take it, and look somewhere else is the way I would do it. I don't think this is a place you want to stick around on a longer term basis. Let's see here. That's LinkedIn. 63.46 is the entry, I don't know, on DD or one of the other ones that Federico was on. Okay, so I got about 5 minutes. I want to pop back over. Here, let me check and make certain I don't have anybody asking me other questions. No, there was a question I missed last week, and let me take this one real quick. XLV. This was the strongest sector last week, and it had a breakout over a swing point high, right? And it had actually two swing point highs. And the way these things, just like we talked about the TLT on Thursday, right? The way it's supposed to work is when you get that breakout, you should extend on the time frame, the highest time frame, for 2 to 3 bars. One, right? The breakout was here, then you got 1, 2, 3 bars. You've probably done just about what you're going to do. You may get one more bar, and then this thing is going to drift back in. So if you're in the XLV, which I know one of the members was who asked the question, I'm sorry I didn't get to it sooner. You want to take your money up here. You want to take some of it. Now, the other way you can do that is do the projection, right? So you got an ABCD structure, the A to there, the B to here, and now your C, D, and it's actually to about right here. So it looks to me like that's just about done. So you can see you got the extension, you got the fast move. Take your money, take some of your money at least, let it come back in, and then now the trade is going to be the retest regen. So when it comes back, right, look for it to retest and regenerate back up the other way because it's strong. So you get your setup, you do your ABCD structure, right? You take some of your money, you let it drift back in, you get back in it, and you try to get another one. And that's the way these things work over and over and over. Okay, let's go back to I want to go back to the world markets. So hang on, let me go find them. Okay, and I want to go to Asia. China, if there's a worry in Asia, it's China. Oops, wrong symbol. Let me go find. I'll use the Hang Seng, the Hong Kong market. If there's a worry in Asia, it's China, and the Hang Seng's not exactly that, but it's close enough, right? For the purpose of the discussion, this thing has, well, first of all, I've talked about it multiple times, but first of all, it had nice, big, strong pushes, right? All these were nice, strong pushes off the bottom, but now you've had nice, big, strong pushes back the other way. The volume characteristics are not exactly even, but you're at a key area now, right? You got a swing point low on an intermediate term time frame, right? That is always important. This is the time frame, folks. No matter what your trades, whether you're an investor or a trader, and unless you're doing day trades or 2 to 3 days trades, the intermediate term time frame is the most important time frame, because if that thing starts to break down, right, that will definitely have this going this way, right? And then this, in this particular case, this will be a sideways trend to start with. But if they break down, and in particular if they have multiple swing points down here, this one's way down, so it's not an issue yet. But if they had multiple, like we saw with the CACs, right, you can get a fast move on this time frame, which is a huge move on this time frame. So China, issues with their debt, issues with the shadow banking. It certainly appears as if they're serious about trying to slow things down in terms of their real estate market through the shadow banking in particular. That's not going to go away easy. I mean, if the government is serious about it, it's gonna cause pain and it's going to cause disruption. So China still is kind of the black hole, if you will, in Asia. Although, certainly when you think about it, the Chinese government is not going to kill the market, but it's going to walk this fine line where it keeps knocking the market down to try to kill the housing for a while, and stop the rampant speculation that continues there. And that is going to keep this big market under pressure. And if they make a mistake, it becomes a big deal. We already see weakness in Europe. I've showed that in the charts. We're seeing it here to some degree. We've seen it in multiple ways in a lot of the other Asian markets. It's not to the point where it's going to kill things, but it's definitely something you got to keep looking at. As far as right now, you got to keep your eye on the ball with earnings and what's happening in this market, and this market does not want to give it up yet. And as long as it doesn't, you got to stay with it if you're trading this market. And when I say this market, I'm talking about the U.S. markets. The rest of the markets, they'll just kind of hang and they'll keep working, maybe get weaker. But the U.S. market, as long as it hangs up here, you got to stay with it. You got to lean long as it wants to go that way. And there will be a time where that's not the case, and maybe it's not that far away. But right now, the signs just are not there, and so you got to keep leaning that way. All right, I got to leave it to that. Thanks for joining me. Have yourself a great night. We'll see tomorrow. I think we got 2 reports first thing in the morning. We'll see what those look like, and then all that Fed speak. We'll see if that's going to make any difference. Because if they come out hawkish, all of a sudden the taper is going to be back on the table and this market's not going to be able to break out. And I actually suspect that is what's going to happen. Maybe we get nominal new highs and then fell right after that. But I can't see, I'm still having a hard time seeing this market break out yet. Looks to me like it's still going to try to come back here at some point fairly soon. Have a great night, folks. Take care. And if you hadn't seen, we're doing a special event Tuesday. If you can join, for subscribers, it will be archived. For just registered members, visitors, you need to actually drop in live if you want to participate and see the show. I'm going to do it on not so much hedging, but the whole idea of hedging. How do you hedge? What is it? Why do you do it? How does it work? So my take on it, if you're interested, drop in. I've hedged off and on. I run essentially a hedge fund management for individuals, and I have to hedge all the time. So I've gotten pretty good at it, or actually I've gotten a lot of experience at it. Let's talk about it that way, because anytime you're hedging, you're taking away some of your gain potential as well as your risk. The key is to try to take away more risk than you do gain. Have a great night. Take care, folks. Good night.